is now the state of this tech trade?
Look, I've got to tell you, I thought that 947 bottom yesterday, some people say it could be put in by Cathie Wood. I felt it was important to mention her name because it's still 12 o'clock. We haven't gone to 12:01 yet. I felt that bottom held. I felt that this is one of those moments where you can start looking at stocks. I got to tell you something here, Scott. Zoom down 40, Lulu down 23, DocuSign down 23, Xilinx down 20, AMD down 20. There are things to buy. And we can sit here and say, well, tech's got expensive. What's expensive is one of my favorites, Caterpillar. I mean, I'd rather take a look at a DocuSign down 23 than I would a Caterpillar up 100. So anyway, that's where I am.
Okay, so it's a very interesting take, and it's really where I wanted to go, Jim. So we're saying Cathie Wood gave us the go-ahead to buy the dip, because that's basically what you're suggesting. When you look at the stocks that make up her portfolios, her ETFs, which are so closely followed. She's got $60 billion of AUM now. Money's been flooding in there. You said Roku's down 11% year to date, week to date. Square 13, Teladoc 13, Spotify 8, Baidu 9, Zillow, CRISPR, Invitae, Shopify. All of these are the tried and true names. There are so many others, but it's okay now to buy them?
I think. Look, she's been dumping Zillow. She's been dumping Roku. Selling 10 cents. I mean, yeah, I think it is okay. I think you have to start somewhere. I know there's a terrific note today, Katie, about Apple saying it's pretty much full boat. You know what? It's 5G. The stocks come down a lot. I've been waiting for these moments. When they come down a lot, you can't just say it's got to come down more. You have to say, let's get started. There's also been a really nice reversal today. I saw Toll Brothers. I love the conference call. The stock was down because people were taking their cue from the bond market. Suddenly, the stock's going back up. So I like the tape. I like the way it held from yesterday. Yesterday was pretty precipitous at one point, and I think there's a lot of opportunity here. I know that there are a lot of people who will say, wait a second, there is a reopening trade and forget everything else. I'm not going there. I think there's more than just a reopening trade happening.
Okay, so Stephanie Link, I come to you next. And I find out today that you're trimming shares of Facebook. You want to tell us why?
Okay, first, I'm still in it. I'm just underweighted, but still have a 100 basis point bet in the name. So I'm not abandoning it, but I prefer Alphabet of the FANGs because I think there's more operating leverage to that story than there is at Facebook. Both are going to benefit from digital advertising recovery, right? But if you think about Alphabet's margins, their operating margins were up 700 basis points year over year last quarter, and they beat expectations by 500 basis points. So trimming some Facebook, because I think up 30% in the last year, it's done what I thought. But I much prefer Alphabet. And I also added a new position. We'll talk a bit better later about that. But, back to Caterpillar being expensive, Jim, I have to take issue with that because better than anybody, industrials are expensive when they're troughing, right? You want to buy industrials. You want to buy cyclicals. If you think the economy is on the mend, which I very much do, interest rates are telling you that, inflation is telling you that, the Fed is telling you that. They're just being conservative, but the numbers are what the numbers are. And if you look across the board in terms of economic data points, industrial production, retail sales, how about that control group retail sales number of 11.8% year over year? That feeds right into GDP. So you better believe that the next couple quarters, we're going to surprise on GDP. We're going to surprise on earnings. That's why you've seen the rotation into value from growth. I do not think you abandoned tech, but I don't think you say that Caterpillar's expensive when you're at trough earnings, and most of the cyclicals are at trough earnings. And again, I go back to the operating leverage story on Alphabet. You're going to see operating leverage up the wazoo in some of these cyclical companies.
I love the leverage story for Alphabet, but I've got to tell you, Deere up 30 last week. Up again today. I like the Deere story because I like the complex. But you need oil go to 70. You need to see a lot more Chinese orders. And I know you like URI, Steph. I presume you still like it. But I've got to tell you, I think Caterpillar has just become a proxy. And, guys, Scott, when you have a proxy, okay, it doesn't really matter what it's just like, okay, I want that to be my proxy. And I don't like that. I like to have also the numbers to back up the proxy.
Well, you know what else you could maybe say is a proxy? And, oh, by the way, Caterpillar hits a new all-time high today. So, Steph, maybe that factors into what Jim's talking about, too, right? You are what your record says you are. Your record says you're at an all-time high for Caterpillar, and there are still issues, as Jim was just describing. Another proxy? How about Jim Lebenthal Disney? Maybe that is, too, because that stock's at a new all-time high today as well, and that is very much going to tell the story in so many respects of the consumer moving forward.
Yeah, and I really like the word he just used is proxy. Yeah, and I think that's the case with Disney as well. It's a proxy for reopening. It's a proxy for consumer communications, excuse me. And it's a hybrid, right? Because you've got both the stay-at-home aspects, which I don't think it needs to be focused on, but the stay-at-home aspects with streaming, but it's got reopening, right? Imagine if those theme parks, which were 40% of operating income 2 years ago and are zero right now, imagine if those come back online this year. People are looking at 2022 as they really come back online. What if they come back online this summer? So I think that is a proxy, and I'm okay with it. Let it run.